First things first, why even bother investing? You see, money sitting in a savings account loses value over time because of inflation. That means every year your money can actually buy less. But investing changes the game. It allows your money to grow. It puts your money to work for you instead of you always working for money. Here's an example. If you invest just $100 a month with an average return of 8% per year, in 30 years you'll have over $135,000. That's the power of compound interest. Investing isn't just about getting rich. It's about financial security. It's about freedom. And it's about making sure your future self has more choices. Before we go deeper, let's clear up some common myths that stop beginners from investing. Myth 1: you need thousands of dollars to start. Reality: many platforms let you begin with as little as $10 or even $1. Myth 2: investing is gambling. Reality: gambling is luck-based. Investing is about strategy, research, and time in the market. Myth 3: you need to be an expert in finance. Reality: with the right tools and mindset, even a beginner can succeed. So don't let these myths hold you back. Before you start putting money into investments, you need the right mindset. Think long-term. Don't try to get rich overnight. Markets go up and down. That's normal. Successful investors stay calm during the ups and downs. They focus on the bigger picture. They understand that consistency beats quick wins. So your first step isn't opening an account. It's preparing your mindset. Okay, now let's talk about the foundation you need before investing. Step 1: pay off high-interest debt. If you're paying 20% on credit card debt, but your investments only make 8%, you're losing money. So handle that debt first. Step 2: build an emergency fund. Aim for 3 to 6 months of expenses in a savings account. This keeps you safe when life throws surprises. Step 3: decide your goals. Are you investing for retirement? A house? Or just to grow wealth? Your goals shape your strategy. Once you've got these basics covered, you're ready to invest. Now let's go over the main types of investments beginners should know. Stocks. These are shares of a company. When the company grows, your shares can increase in value. But stocks can also go down, so there's risk. Bonds. Think of bonds like loans. You lend money to governments or companies, and they pay you back with interest. Bonds are usually safer than stocks, but give lower returns. Index funds and ETFs. These are baskets of stocks or bonds grouped together. Instead of picking individual companies, you invest in the whole market. This is one of the safest and easiest ways for beginners to start. Real estate. You can buy property or invest in REITs, real estate investment trusts. These let you invest in real estate without buying a whole house. Other assets. Things like gold, crypto, or commodities. But for beginners, it's best to stick with stocks, bonds, and index funds. All right, now let's get practical. How do you actually start investing? Step 1: choose a brokerage or app. This is where you'll buy your investments. Some popular ones are Robinhood, Fidelity, Vanguard, eToro, or even apps like Acorns. Step 2: open an account. It's just like opening a bank account. Fill in your info, link your bank, and you're ready. Step 3: deposit money. Start small. Even $50 is enough. Step 4: pick your investment. For beginners, index funds or ETFs are the safest bet. They give you instant diversification. Step 5: automate your investments. Set up automatic deposits every month. This way, you stay consistent without overthinking. Investing always comes with risk. But the key is diversification. Never put all your money in one stock. Spread it out across different companies and industries. This way, if one company fails, you don't lose everything. That's why index funds are so powerful. They give you instant diversification. Remember the rule: never invest money you can't afford to lose. Now let's talk about strategy. Investing is not about timing the market. It's about time in the market. The longer you stay invested, the more your money grows. Here are 3 proven strategies: dollar cost averaging. This means investing the same amount regularly, no matter what the market is doing. Sometimes you'll buy high, sometimes low. Over time, it balances out. Buy and hold. Instead of chasing trends, you hold your investments for years or even decades. This reduces stress and increases returns. Rebalancing. Every year, check your portfolio. If one area grows too much, adjust it back. This keeps your risk level stable. Let's talk about beginner mistakes. Mistake 1, trying to get rich quick. Don't chase hype or hot stocks. Mistake 2, not diversifying. Putting all your money into one stock is dangerous. Mistake 3, selling when the market drops. Markets go up and down. Don't panic. If you stay invested, you usually recover. Mistake 4, investing without a goal. If you don't know why you're investing, you'll get lost. Avoid these mistakes and you'll already be ahead of most beginners. Now let's quickly cover some tools that can help. Brokerage apps, Robinhood, Fidelity, Vanguard, Charles Schwab. Budgeting apps, Mint, YNAB, Personal Capital. Educational platforms, Investopedia, Khan Academy, and YouTube channels like this one. The more you learn, the more confident you'll feel. Let's recap with a simple step-by-step wealth plan. Pay off high-interest debt. Build an emergency fund. Set your goals. Open a brokerage account. Start with index funds or ETFs. Automate your contributions. Be patient and stay consistent. Follow these steps, and over time, your wealth will grow. Investing isn't about being lucky. It's about being consistent. It's about thinking long-term. You don't need to be rich to start. You just need to start. Even small amounts today can grow into big amounts tomorrow. The earlier you begin, the more time your money has to grow. So don't wait for the perfect time. Start now. Your future self will thank you. If you found this beginner's guide helpful, give this video a thumbs up. Subscribe for more content on personal finance, investing, and building wealth. And let me know in the comments, what's your first step in investing? Thanks for watching, and I'll see you in the next video.